Hello again. We've been getting comfortable with financial statements, and now we're going to pull it all together, and you can see how they work as a dynamic reporting document and not just standalone statements. So let's get started. We know that we prepare our financial statements first by doing the income statement because we need to have that net income in order to do the other comprehensive income statement, and we need to know what the other comprehensive income is in order to do the shareholders' equity section of the balance sheet. And we can't do the cash flow statement until we know what beginning and ending cash balances are, and the indirect method of the cash flow statement says I also need to know what the net income is from the income statement. So you're saying to yourself, how am I ever going to remember this? Well, is income statement, she, for shareholders' equity, which other comprehensive income is part of, BS, cash flow. So is she BS cash flow or is OCI BS cash flow? Either way, that's the order. Now, let's put it into perspective. We said that the balance sheet is the snapshot of a company's financial health at a moment in time. So basically, when we look at financials, we're looking at the balance sheet at the beginning of the year, the balance sheet at the end of the year, and asking the question, what happened? Why are these balance sheets different? Well, the reason these balance sheets are different is because activities happen during the year. The first thing that we want to look at is that matching of the revenue and expense. Why we're in business. We're in business to sell goods and services, or products and services. So let's look at what the net income is from those activities of being in business. And that net income flows to a portion called retained earnings. Now, retained earnings is just that. It's the profits or the earnings of the business that are kept by the business and not paid out in dividends to the shareholders. So notice that beginning retained earnings plus net income minus dividends will equal the ending retained earnings that shows up in shareholders' equity on the balance sheet. And so those are the profits that the company retains for itself. Now we also need to look at what's going on with the rest of the shareholders' equity, which has to do with stock transactions like IPOs, initial public offerings. It could also be that the company is buying back its own stock, which is called treasury stock. So if a company buys its own stock on a stock exchange, they're basically keeping their stock in their treasury, or its treasury stock. The other things that can happen in other shareholders' equity is that other comprehensive income also shows up here. So we're just going to take the beginning of everything else that's in shareholders' equity, look at those changes, knowing that they can be from issuing stock, buying back our stock, OCI can all be involved to get the ending other shareholders' equity number. And that other shareholders' equity number is what shows up on the ending balance sheet. So as you can see, we need statements in between the beginning and the ending balance sheet to give more detail to what happened in shareholders' equity, number one. The second thing that we're always interested in is how did cash change from the beginning of the year to the end of the year. So one of the ways we can do that is to analyze all the transactions in the business from the beginning balance sheet to the ending balance sheet to see how they were impacted with cash. Did they provide cash, or did we have to pay cash? So the statement of cash flows shows that as well. So again, we do the income statement first, the statement of OCI and shareholders' equity second, the final balance sheet third, and then the cash flow statement to round it out, because we need numbers from each of the preceding statements to do the succeeding statements. All right, so let's see one in action. Here's Facebook. Now, what I've done is I took Facebook's balance sheet at the beginning of the year, Facebook's balance sheet at the end of the year, the numbers that you have previously found. I've taken their income statement, numbers that you previously found, and rolled them up a bit, so it's just total revenues and total expenses. And I've looked at the difference in their shareholders' equity and their statement of cash flow. So all of these numbers you have seen before, it's just I'm showing the interplay between them. So you can see why it's good to analyze all the statements, not just one statement in isolation. So that's Facebook. Here's Delta Airlines. Beginning balance sheet, ending balance sheet, income statement numbers we found, cash flow numbers we found. And looking at this, what is interesting, if you're looking at Delta compared to Facebook, the mix of their assets is very different. Notice that Delta has a lot of long-term assets. Facebook doesn't have very many long-term assets. So it's very interesting always to look at the anatomy of these accounts and the relative sizes of the various assets, liabilities, shareholders' equity, revenue, or expenses. Here's Home Depot. So Home Depot, beginning of the year, again, look at the mix of the assets. They have a lot more other current assets and a lot of long-term assets. They also have a lot of long-term liabilities. Balance sheet at the end of the year, cash flow numbers we found previously, income statement numbers we found previously, and what's interesting about retained earnings is that Home Depot actually did pay dividends. Now, I can find that dividends number on the cash flow statement in the financing section. So I was able to verify that math does work across statements because that cash dividend amount was disclosed as a financing activity on the statement of cash flows. Here's Google. Again, Google, very different. They have lots of other current assets. Those are the marketable securities that they buy. So notice like half of their assets are probably marketable securities. So they're making their money work for them, which is really good. So balance sheet beginning of the year, balance sheet end of the year, income statement, statement of cash flows. We found all these numbers. Notice that Google does not pay dividends. Home Depot, we've seen. Google, we've seen. And here is your final quiz. Here is some missing numbers, and what I'd like you to do, based on how you know how these statements flow together, is to find the missing numbers. Number 1 is to find the net income. Number 2 is to find the ending balance in other shareholders' equity. Number 3 is to find the ending retained earnings number. Number 4 is to find total liabilities and shareholders' equity. 5, total assets. 6, ending cash. 7, beginning cash. And 8, the change in cash for the year. So I hope you've enjoyed this series of just giving you a taste of what's to come in the coming semester because we'll be using financial statements and getting to the bottom of all those numbers during class. So just enjoy it. It's going to be fun.